evening, everyone. This is James coming to you from Dividend Stock Talk, where we talk about dividend stocks for investing for monthly and weekly cash flow. Today is Sunday, August 13th. It is 11:30 p.m. and we have a new week coming up next week. So we're going to get into some dividend trades and see how much money we can make next week. Or this upcoming week. And find out where we stand with our accounts as it is at the moment. So let's jump on in and see where we are. And here we go, account number one. This is our, I believe it is, this is our dividend investing with options. Okay, we're just a tad bit under 50% for the year with this one. So let's see what we're looking at. We only have one position. We bought Colgate-Palmolive quite a while ago, and we ended up doing quite a bit of covered calls on this. So we bought it for, I believe it was 74. Let's open this up and find out exactly where we stand with Colgate-Palmolive. Now you gotta remember, Colgate-Palmolive is a dividend king. They've been around for over 100 years. Everybody's heard of them. The products are widely known, distributed all over the planet. So Colgate-Palmolive starts out at 74 for the year. Trades for about a month right there. Drops down to the 71, 72 area. Trades there for 2 months. Drops down to 66. Trades in the 66 area for 1, 2, 3, 4 months. Shoots on up to 74, 73, 74 area. Goes there for a couple more months. Hits a high of the year right around 77 bucks. And she proceeds to drop back down to 71, where she is now. Now, we bought it up at 74 back at the beginning of the month. I think it was July 1st, wasn't it? Let's quickly check. Okay, right-click on here, go down to View Trades, click on that, and we did. We bought it July 1st. And guess what? We collected the dividends on it, which were around 2,600 bucks, which was great. For 4 weeks, we've done covered calls for 4 weeks. It does have weekly options, so it allows me to write a weekly option covered call every week because we own 5,000 shares. That's 50 contracts, so 50 times whatever it is. This week we sold the 74 calls, which expires this coming up Friday. We only got, I believe it was 26 cents, and that it gave me roughly right around 1,100 bucks. So it was 1,100 this week, about 1,000 last week, I think. I had 21 the week before, 24 the week before, and 26 the week before. So, and then we also made the 2,600 in the dividends. So we bought this thing, like I said, July 1st, and every week we've been just collecting more and more money on this. So besides the dividends of themselves, we've been collecting quite a bit of premiums for the covered calls. And what covered call basically is I bought it, as you can see right here, for $74. Okay, $74 per share. Now, a covered call is where you buy the stock and then you sell somebody the option for them to buy it back from you for whatever price you want. In this case, I am selling it, or I'm selling somebody the right to buy it from me this coming up Friday for the exact same amount of money that I paid for it. So what am I losing? What am I gaining? I'm not really losing anything other than time, because as the weeks progress, time goes on and on and on. Nothing you can do about time. It just keeps on going. But what am I getting out of it? Well, first of all, the first week we collected, I think, like I said, 2,600. The second week we collected 24. The third week we collected 21. And then also, I think the second or third week we also collected, I think it was 25 or 2,600 for the dividends. And then the week after that, excuse me. Very unprofessional of me. I'm terribly sorry. Let me apologize again. So that's where we stand with Colgate-Palmolive. We can't really do anything in this account other than just watch from the sidelines and find out what's going on. But we are going to take a look at who is offering dividends this week and who has what options available on them and which companies look most profitable for this option trading strategy coupled with the dividend. The dividends have a tendency to make the stocks go, certain stocks. Let me say that again. The upcoming dividend payment that the company pays has a tendency to make certain stocks move up just before the dividend. So what that allows us to do is do a certain option play that gets a higher than average return. Okay, so I usually don't do any trade unless it's 20% or more for the week. Okay, once in a while I'll do a 10% as if it's like for a day or two. But for the most part it's usually 25% or higher if I'm going to do a full week. That sounds kind of strange, kind of far-fetched, but it is what it is. Let's move on and see who's doing what. So we're going to move on over to the Market Watch. And when that opens up, let's go scan. When Market Watch opens up, you have an opportunity to look at quotes, alerts, visualize, financing rates, and the calendar. So on the Market Watch, I always go for the calendar because I want to know what's coming up in the next couple of days. Today's the 13th, tomorrow's the 14th. Now we want to look at stocks 10 days in advance. So with tomorrow being the 14th, we want to look at the stocks last week of August. That's August, the 5th week of August. That's the 28th, 29th, 30th, 31st, and September 1st. Wow, September already, my goodness. All right, so we're looking at the 28th. So tomorrow, we've got 5 companies we're looking at. Waco Group, they're offering 22 cents. Sun Life Financial, they're offering 34 cents. Qualcomm, they're offering 57 cents. Which is Lowe's. It's not Lowe's like the home building department where they do 2x4s, wood paneling, home improvement store. No, that's not Lowe's. That's L-O-W. Okay, this is, I'm assuming they pronounce that Lowe's, L-O-E-W-S, Lowe's Corporation. I have no idea what they even do, but they're only offering a 6-cent dividend, and I really don't chase 6-cent dividends because it's really not worth my time and effort. CTT, which is Ketchmark Timber Trust. I have no idea what that is. However, we stick that into the calculator and that will show us how well they have performed over the last 10 years. Now, I'm not going to do that now. Only those who are actually subscribers get to use the that software. But I'm going to show you some of the basics to see where we stand and what can we do with these 5 stocks. Now, those are the ones offering dividends. There's 56 companies on Tuesday. We're not going to look at those today. We're going to look at those tomorrow. 80 on Wednesday, 15 on Thursday, and another 20 on Friday. Okay? Now, like I say, I trade different strategies and I use different trading accounts with the different strategies. That way, at the end of the year, we can do a analysis of each trading strategy and find out which one worked best for that year. Now, each trading strategy is going to be different for everyone because the options trading strategy is a little bit, I should say, a lot more complex than the regular dividend capturing strategy. Dividend capturing, you just buy the stock, capture the dividend, sell it, move on to the next stock. Simple, easy, very safe. Worst case scenario, you end up with a company that pays you a dividend every 90 days. Can't go wrong there. But the option one makes a lot more money, but there's more risk, and you need to have a little bit more time to invest, okay? Because there's a lot bigger learning curve when it comes to options. And I don't cover all the options, just a simple, easy, profitable trading strategies. So that all being said, let's quickly jump up and look at who has options, weekly options. Okay, so I click on this little wheel here. This drop-down menu opens up, and I come down here to public, N through W. Another pop-up opens up, and I drop all the way down to the bottom, and that comes to weeklies. Just the companies that offer weekly options. And as you can see, there's only one available for tomorrow. That's QCOM. So let's take a quick look at QCOM and see where they are. QCOM. Hit enter. Now QCOM started out the year at 62, traveled sideways for about 2 months, then jumped up to 67. Then traveled 1, 2, 3, about 4 months. It's a 67 area, and then drops down to 55. Now that's kind of like a big drop, especially if you're holding quite a bit of stock. And if you're still holding, if you bought up here and you're still holding it down here, trust me, I've been there. I think I held Macy's since February. A couple of years ago, I had COH, which was, that was Coach pocketbooks. Oh my goodness, I held on to that for 2 years. Collected 3% every 90 days. No, collect 3% a year for 2 years. I sold a bunch of options off of that one. Then I ended up turning around and reselling and still making a profit after holding it all that time and collecting all those dividends and all those premiums. Okay, so QCOM is the only one available. Oh, as I was saying, she dropped from 64 down to 55. So that's like a $10 drop. Okay, going sideways for quite a bit, and she is where we are today, here at the 52 area. Now, could this be the bottom? I don't know. Okay, let's take a look at the seasonality chart. Now, the seasonality chart basically is a 1 year chart on top of another 1 year chart on top of another 1 year chart, based on a bunch of algorithms and a lot of mathematical equations to come up with an average movement for the 10-year period. So if for 10 years, this is what the average movement looks like for QCOM. Okay, the blue line represents what she's doing currently. Okay, so as you can see, beginning of the year she went sideways for a little bit, dropped down, just like she did here on the right line. See the blue line? Trade a little bit, went up, and then spiked down, almost exactly like the red line, but a little bit more exaggerated because it's only 1 year, not 10. And then she goes back up, right? In the blue line, she went back up. A little bit of a dip right here, a little bit of a dip. Went back up again, like this one, went back up again. Came back down, and this one came back down. So here she is on a recovery, and here she is on a recovery. So where are we today? Today is right here. So I want to click and drag and find out where we are. All right, so here's where we are today with the blue line, August 11th. So tomorrow's August 13th. This is what we have to look for the next week or so. This baby looks, now I say it looks like this is what it's going to do, but there's no guarantee because nobody really knows. The only person who knows what it's going to do tomorrow is the market maker. The market maker will know where she opens up tomorrow, but she has no idea where the low is going to be, where the high is going to be, and where the close is going to be. But he does know where the opening for the market tomorrow is going to be. So on average over the last 10 years, this thing has gone up in this time frame, August 11th. She went up for about a week, and then she starts to drop. So, we're going to see what kind of options available for this week coming up. Let's go back to my standard chart. There we go. Now we're at 52, and we are going to put in QCOM. Okay, QCOM right here. Let's open this up. Let's get rid of that. 52.72. So we want to look at the 52.50, which is right here. Now that looks nice. 33 cents. What does that mean? If you don't understand options at all, let me briefly explain it to you. If I buy QCOM at 52.72, which is basically what she closed at on Friday, if I buy it for this price, I can either turn around and resell it for that price, wait for it to move up, sell a covered call against it, basically let somebody buy it from me the same price that I bought it from, or a little more, a little less, depending on what your position is. This position here is what they call a vertical spread. Now, if I was selling one over this side, that would be a credit spread. If I'm selling up here, that'd be a credit spread. But I'm buying down here, this one. So that is called a debit spread. And what is it exactly? Okay, it is actually two trades in one. I'm buying at one price and I'm selling at a different price, a higher price. And the spread is the difference between the lower price that I bought and the higher price that I sold. So I'm buying it for $1 and I'm selling it for $1.50. Basically how it goes. So I'm only collecting 50 cents for that time frame, however it is. Now this just so happens to be a weekly option, which means we fill it tomorrow morning and then we're out of it by Friday afternoon or Saturday afternoon, because the options expire on Saturday. Okay, all that being said, this is the one I want to do, because it's 50.52. The reason why I picked this one is because the stock right now is at 52.72, which means it's already past the 52.50. So I've bought, I didn't do it yet, I'm going to if I was going to do this. I would buy the 52 and then I would sell the 52.50. Okay, so it's kind of like a package deal. I'm buying this one and selling this one all at the exact same time. And what am I hoping for? What is my exit strategy? My exit strategy is by Friday, the stock stays where it is or goes higher, and I get to profit however much my profit is. Let me explain to you what my profit could be if this thing goes in the favor, which I think is going to go. Now, we've already figured out a few things. Number one, she's on weekly options. Number two, she got a dividend coming up in 10 days. Number three, the chart looked pretty good. So let's go back and look at the chart again so I can explain to you why it looks pretty good. Okay, now, it's not at the high of the year, and it's not at the dead low of the year. It's somewhere in between. Okay, so it could be at some support, because as you can see, I got like a triple bottom here. One bottom there, one bottom there, one bottom there. Could this be the support where it's not going to go any lower than 52? Because people are out there saying to themselves, oh my God, Qualcomm, QCOM is at 52. This is unbelievable. Let's buy it. Is that what's happening? I don't know. I really don't. I look at facts and I look at odds and probabilities. Okay? Now, do I know where it's going to go tomorrow? No. Do I have a rough idea? Not really. I have a guess. I have a guess using odds, probabilities, and statistics. What does that mean? That means, number one, the dividend's coming up, and the stock usually goes up before the dividend comes. That's 10 days. That's 10 days from tomorrow. Okay, so the dividend's coming, stock has a tendency to move up. Great. Wonderful. The seasonality. The seasonality is how does a stock react throughout the year based on historical performance. How did it do in January? How did it do in February? How did it do in March? Well, we just so happen to be in August. More specifically, in the exact middle of August. Okay, the dividends can be paying out at the end of the month, which is 10 days from today. The seasonality says it's going up. Now, let's look at a few more facts. If I wanted to buy this spread here, okay, this is a debit spread. I'm going to be buying the 52, right? And then I will be selling the 52.50. So the most money I can make out of this trade is 50 cents. That's it. So why do I want to do it? Well, numbers. That's it. That's my answer. Because the numbers work. Let's review the numbers for a little bit. I like to do 50 contracts, which is about 5,000 shares. You can do however many you're comfortable with. But I would suggest do the math, because there's always a possibility where the stock goes to a point where it makes more sense to buy it than it does to let the stock go. Okay, which is the position I'm in with Colgate-Palmolive. I don't like buying it, but if I have to, I will, and I'll do a covered call against it so that I'm still profitable. Okay, so we're looking at 50 contracts, and this is what the order looks like. The first part of the order, the first half, or the top half, is the plus sign right there. See that? That means I'm buying. I'm buying, okay, right there, the word buy, 50, QCOM, 18, August 17. What does that mean? The 18th of August, 2017. That's this coming Friday. Now, the strike price is the price that I think it's going to be at on Friday, which is the 52, right? The 52. Okay. Now, I'm not going to do these section right here. Just give me a minute. I'm going to get to those. The second half of the order is sell 50 contracts of QCOM 18 August 17, which is this Friday. And this is the 52.50. So I'm buying the 52 and I'm selling the 52.50. Now, what am I paying for it? Yeah, I'm not paying $52 and I'm not paying $52.50. No, I'm only paying 33 cents per share. Multiply it out. Let's find out what it is. 5,000 shares. Multiply by 33 cents per share equals $1,650. I could easily figure that out doing this, right? Confirm and send. Here it is. Buy 50 vertical QCOM 100, the 18th of August 2017, 52/5250 calls at 33 cents limit order, okay, to open. Okay. My break even is 52.33, which is down further because right now it's at 52.72. 52.33 is my break even point. The maximum profit I can make on this deal is $850. Granted, that's not a lot of money, but how much am I paying for that? Okay, the cost of this trade, including commissions, is $1,731.95. So that's $17.31. Let's clear that. Let's go to $17.31. And what is our profit going to be? Okay, the maximum amount of our profit is going to be $850. Okay, we want to divide that by our profit margin, $850, I think. Is that right? That's not right. Yeah, see, that's not right. Clear, sorry. Take the profit margin and you divide it by how much it's going to cost you. Divided by 17.31. 17.31. That, okay. 850 is my maximum profit. It's going to cost me $1,731 to do this trade. What's the maximum amount am I going to make? Hit the equal sign. There you go. 49% return for 5 days. That's almost 10% per day. Almost. It's like a 49% return for 5 days. Now, let's look at it a little deeper. The stock right now is at 52.72. Okay? So, stocks only move in 3 directions. Up, down, or flat, sideways, whatever you want to call it. Flat, not going anywhere. So this particular stock, this particular trade, and this is why I do these trades only in this trading account, in this scenario. Okay, so if the stock goes up, we make our 49%. If the stock doesn't move at all, stays exactly where it is on the close of Friday, 5 days from today, I make the 49%. Okay? Movement number 3 to the downside. If the stocks go down, this thing can go down all the way to 52.33, which we might break even. Anything above 52.33 is profit. Now, I don't know about you, but profit is profit no matter which way you look at it. So what are my hopes? My hopes are that the stock stays the same or goes up. As long as she closes above 52.50 on 4 o'clock on Friday afternoon, I'll make 49%. That's what I'm looking for. That's the trade that I would do first thing tomorrow morning. I'd actually put the trade on this evening and let it get filled first thing in the morning, because I'm a lazy trader. Do it tonight, walk away, let me know tomorrow whether or not it got filled. That being said, it's the only one really worthy looking at for tomorrow. Okay, basically the only one. Now tomorrow we're going to look at 1, 2, 3, 5 of them. Okay, we'll look at these 5 tomorrow. That being said, let's jump on into the other account and see what that's doing. Kind of like just going through the motions with this one. All right, SKT, we're looking to get 32.90, and she's only at right around 25 bucks. DFS, we're looking to get 67.18, and we're at 59, almost 60 bucks. So about 11% off on that one. 11% off of DFS and SKT. We're down 6, 7, 8 bucks, 25%. Holy cow, this thing's got like a move up 25% before I can break even. Ugh. You like that one? Okay, Macy's. Whatever happened to Macy's? Look at it. Macy's, we're down $20,000 on Macy's. Why didn't I unload it? I'll tell you why. Because every 90 days we're collecting dividends on it. That's one, and they're about 3% return. So I'm just going to hold on to it. Macy's is a good company. They've been around for over 100 years. They've been paying their dividends diligently for quite a while. So I'll just hold on to it and hold tight in that position. Johnson & Johnson, we just picked this one up the other day. And we're only down 30 bucks, so that's not a big deal. Excuse me. DFS, we should be about ready to collect another dividend on DFS, because we only collected one dividend on this one. We're down $5 grand on DFS. Okay, 67. And it's at 60 right now. So she should go up 11 bucks, which is about 10 to 12%. We're waiting for that thing to move. Okay, Macy's, like I said, we're down 11, so it's going to move up 13, almost 13 bucks, which is a little bit more than 50%. Wow, that's killer. Let's see where Macy's is at the moment. Macy's starts the year out at 40. Trades a couple weeks there. Finds a bottom at 35 for a little bit. Trades 1, 2.5 months. Shoots on up for the high of the year at 45.41. And from that, of November 11th, she slowly drops and drops all the way down to 29. Sideways for a bit, then it drops back down to 22, and sideways again. And lo and behold, she drops yet again to be in the $20 area. Can't do anything about that other than collect the dividends and say thank you until she moves back up to where she's supposed to be, in my humble opinion, of course. All that being said, I'm going to check and see if I have any questions. If not, we'll be out of here and look forward to seeing you guys tomorrow. No questions. Yay. All right. So this is James signing out from the 10-Minute Trader. If you guys want to increase your returns for your investments, can't go wrong with dividend stocks. They've been paying for over, I don't look at anything unless it's been paying for at least 10 years or more. 10 years or more works for me. Anyway, this is James signing out from the 10-Minute, wait a minute. Dividend Stock Talk and 10-Minute Trader. We will catch you later. That being said, You guys have a nice weekend, and I'll talk to you later.